The focus at the moment is very much on sovereign debt defaults. Focus has been on military interventions, on elections that turn into mayhem, and civil unrest. And that is not the narrative that we at Pangea-Risk advise our clients on. And similarly, it's not the real data-driven story that is happening in Africa.
Robert Besseling, thank you so much for joining the NABA Perspectives Podcast. Real pleasure to have you on.
Landre, it's very good to see you again virtually from sunny Norway.
Yeah, and I'm dialing in from sunny London.
Excellent.
Which is a nice change. Anyway, we're here to talk about risk in Africa, navigating that risk. Anyone who pays attention to world affairs, news about Africa knows that there's plenty of risk to go around at the moment. And what we want to do is get a bit of an insight into what some of the most important issues and trends are that people need to understand when it comes to Africa, and more importantly, what it means for business and how to understand and navigate that risk ultimately. That's kind of what we want to get some insight into. Before we dive into the topics, give us a bit of background on yourself, Pangea-Risk, and your work. What do you do? How does it? What brings you to the table, so to speak?
Thanks, Landre. Yeah, so I'm Robert Besseling, and I founded a company called Pangea-Risk we're getting close to 10 years now, Landre. I think we're on the 9th year now of operation, so big anniversary party probably next year. And we are a specialist intelligence advisory. So we provide forecasts on country risk, and our client base uses that to support their risk mitigation strategies, and similarly also to help identify new business opportunities. So we mostly work with financial sector clients like banks, insurance, development finance institutions, also corporates. And one of the reasons why I'm joining you on this podcast from Norway is on the back of the Bern Union Spring Meeting, a association of export credit agencies and private sector insurers to whom we provide quite a bit of our intelligence on Africa and the Middle East, is gathering here. So we've been talking a lot on sovereign debt and on supply chain risks facing the African continent.
All right, great. Thank you so much. Now, let's start with the big picture. If you follow the news about Africa the last couple of years, there's been, I think it's fair to say, plenty of negative news. We've heard about instability and conflict. We've heard about military coups. We've heard about a debt crisis. Increasingly, we are hearing about the impact of geopolitical trends, rising global geopolitical tension, and the effect that has on Africa. Things like what's happening in the Middle East and the Red Sea come to mind. Give us a bit of a snapshot and overview of what some of the most important trends are when it comes to understanding risk in Africa in 2024.
You're absolutely right. There's such a negative narrative on Africa at the moment. You're almost afraid to open a newspaper these days, right, Landre? I mean, we need more journalists like yourself back to cover the continent. Right? Go ahead. Yeah.
We're good.
The focus at the moment is very much on sovereign debt defaults. Focus has been on military interventions, on elections that turn into mayhem, and civil unrest. And that is not the narrative that we at Pangea-Risk advise our clients on. And similarly, it's not the real data-driven story that is happening in Africa. There's huge amounts of opportunity on the African continent, as we see by increasing levels of trade and investment and engagement. Lots of different regions around the world are engaging with African jurisdictions and African markets on a economic level, on a geopolitical or diplomatic level, or security level, finding new partners. Of course, there is a country risk aspect to dealing with any emerging markets, and these days also with many advanced economies. And it's a misinterpretation very often, or a misrepresentation of the African perception of risk. The main risks that we are currently looking at is based around policy uncertainty on the back of elections. We're less worried about coups because very often coups actually provide more policy certainty for our clients and investors. We are interested in electoral cycles in terms of how that changes contracts and policy. Also, how that feeds in, for example, to the civil unrest outlook. Many countries in Africa are struggling with rising food prices, high costs of fuel, high cost of electricity, in general, a high cost of living. Like most people around the world are in this cycle at the moment. But in emerging markets in Africa, with many disadvantaged communities, people are struggling. And that's having a political and economic impact. That's particularly where we are very interested in looking at how that actually affects commercial operations and whether investors should be wary of those types of trends. So we look a little bit more at the data and the actual footprint of country risk around the continent. And we try and advise our clients on what they can expect in reality in the African continent, and advise them on commercially actionable country risk forecasts.
Great. Thanks. There's a lot to unpack there. Before we delve deeper into some of these issues, particularly debt, I think is an important one to talk through. The issue of civil unrest that you raised, linked to policy uncertainty, and of course a very busy election calendar for Africa this year. Before we do that, it's always good to take stock of some of the more important and bigger economies on the continent, and there are a few that stand out. What's your sort of high-level take quickly? We don't have the time to get into the detail, but places like Nigeria, South Africa. Nigeria's obviously had an election just under a year ago. South Africa is about to go into an election. There is a lot happening in Egypt as well. Places like Kenya, perhaps. Could you give us just a quick few sort of points on some of these more important economies?
Definitely. This really comes down to a risk perception issue, as we were talking about earlier. In terms of broad strokes, we're really interested in the reformist agenda that we're seeing across many new African governments, starting with Kenya, for example, biggest East African economy. Just about 2 years ago, huge investor concern around potential debt default, non-payment risks. And the government there has started a drive for fiscal consolidation, maintained an IMF program, cut subsidies, cut the public payroll, very painful, almost austerity measures, which many Kenyans have felt socioeconomically. Duplicated perhaps from the Angola model during the pandemic, where Angolan government did exactly the same to avoid a debt distress or a debt crisis. Kenya, we're already starting to see the benefits of this reaping off. And we are seeing this model being duplicated by other big economies around the continent. Nigeria, the new government there, as you said, just in power, has been exceptionally aggressive in rolling out very widespread reforms, cutting those fuel subsidies, although possibly restored some of them over the past few months. Currency reform, which was so needed, and many other aspects, trying to incentivize foreign direct investment into the oil economy and also into economically diversified sectors. With Nigeria, we're still a bit in a holding pattern because, first of all, unlike Kenya or Angola, the benefits of that reform strategy are not yet paying off for the economy. And certainly the trickle-down effect is certainly not visible yet in Nigeria. It's very much a socio-economic distress level at the moment. And similarly, we have to see whether in Nigeria there's political will to maintain that policy holds. So that's what we're seeing through big economies. Egypt is in exactly the same boat. Egypt is going through a reformist drive, and here the government has found exceptional external support. Another big economy we can't miss out on, of course, is South Africa. Technically will become the biggest African economy again, just for a few months this year. There, everything is driven by politics. The reforms that are desperately needed to restructure the South African economy and put themselves on a more sustainable growth footing are just not being implemented because of the upcoming elections. So there, Landry, a really good example of how politics and economics do not go hand in hand in the African continent.
Right. Now, painful reforms we're seeing in a number of countries. You've just touched on that. The IMF will tell you quite necessary reforms. And a lot of this, of course, is linked to the fiscal positions that many African governments find themselves in, which has deteriorated significantly in recent years, principally due to concerns about debt sustainability. Now, the IMF is telling us that aggregate debt to GDP ratios are going to drop slightly in sub-Saharan Africa, but they're saying don't get too excited. This isn't necessarily the end of the problem because funding is still very difficult to access, even though we've seen a few sovereigns return to the capital markets. What's the debt outlook for sub-Saharan Africa, broadly speaking?
It's a key question across the African continent, where the IMF is still rating many big economies in debt distress or at high risk of debt distress. We've just seen the spring meetings end, and there's a big focus on a lack of debt sustainability, or for some cases, a lack of debt affordability. We're a bit more optimistic on how many of the larger economies are pulling themselves out of this debt crisis, if I may borrow various pundits' terminology over the past few years, or a so-called debt trap. We've released several white papers, position papers on the African sovereign debt story. The latest one was actually published last week, together with our partners at a recently launched impact fund called Acre Impact Capital, where we look at the more sustained footing in which several big African borrowers are putting themselves. What have they done? First of all, they've reached out to investors in a non-deal context to be more transparent and accountable in terms of their financial and fiscal positions. They've reached out to the IMF. Many of them have joined or applied for funded programs, which have provided credit support, but also provided policy anchorage that has unlocked more foreign investment and multilateral and development finance support. And similarly, many of these markets, because of their more accountable and transparent footing, have been able to go back to international debt markets. For the first time in 2 years, Africa was essentially locked out for most of all of 2023. And now that we've seen average yields drop, African markets, particularly more diversified economies, have been able to issue Eurobonds or ESG bonds. Ivory Coast, Benin, and Kenya have done it already this year. We're expecting Angola, Nigeria, South Africa, and Egypt to do so in the next few months. I think Nigeria is talking about an issuance of $30 billion in June. Quite phenomenal if that were to happen, from the latest statements from Lagos and Abuja. So if that does happen, it may be that Africa has stepped away from the edge of an African debt crisis. There are still markets we're worried about, Lanre. There are still smaller economies, particularly in terms of a slow progress on the common framework. Ghana still has no deal with the Eurobond holders. Ethiopia needs a deal with the IMF desperately and needs to devalue its currency to do so. And also, let's not forget that just because the common framework has a final deal in Zambia, that does not mean that the banks and the export credit agencies have a final deal yet. They are just getting started, and they're very much at the end of the queue here, which is a big concern for many of the private creditors, which have been counting on the common framework to help them through the past 3-4 years of African debt uncertainty. So a lot of work still needs to be done, but let's focus on some of the positive developments that have happened over the past few months, which we certainly believe is putting Africa on a more sustainable and potentially more affordable foothold to attract more debt.
Yeah, important observation you make there about private creditors, because when it comes to debt service payments, which have really been the proverbial straw that's kind of threatened to break the camel's back in Africa, it's the private creditors that have a key role to play. So it'll be important to see how things evolve in terms of the common framework. Would you say the worst is over in terms of debt?
You know, one size fits all, and this narrative never works, right? I mean, as we both know, there are so many diverse markets and issuers and borrowers across the continent. In terms of debt, we are positive on some of the bigger economies that have gone through that reformist agenda and which have relatively low public debt to GDP ratios. Tanzania, we haven't mentioned. Huge interest by the government there to invest more in infrastructure and going to debt markets. To be honest, creditors don't really, or investors don't understand Tanzania that well. So a lot of interest in trying to understand Tanzania, look at the long-term sustainability of the economy, and the government is incentivizing investment and looking for more debt. But on the other hand, there are countries like Malawi, Sierra Leone, many others, which are not rated by the big credit rating agencies, Landry. And they're effectively in default. Most people don't know that, but look at trade finance facilities, export finance facilities, even big power projects that we've seen extensive delayed payments or non-payments on over the past few quarters. These countries are in default. They might not be Eurobond issuers and not be in the international debt market. And that's really, therefore, leading us to a discussion on how do we resolve not just the sovereign debt crisis, but particularly the forex shortages crisis. That's a more prevalent problem for many African economies at the moment. And also, how then do we make ratings of African economies and sovereigns more fair, where we cover all of them in the African context, not just looking at the context of Eurobond defaults and broader credit rating agencies. So slightly straying off topic there, but we think that we are seeing an improvement in the African debt outlook. The worst of the crisis may be over, but there are exceptions to that broad stroke, Landry.
Good reminder, both one for to be nuanced about Africa. It's a very diverse place, 54 countries. It's not a country. But two, also the need for vigilance, right? It's a process, not an event. And on the latter note, you spoke to the issue of the potential for civil unrest and political instability. And you also noted that many African citizens are confronted, as many around the world are at the moment, with rising food prices. Inflation remains an issue in many economies. Now, back in 2022, 2023, there was some coverage of this and the risk of this spilling over into the streets, so to speak. You don't hear that much about it at the moment. How much of an issue, or how serious is the prospect that we might see more civil unrest in sub-Saharan African economies?
I'm joining you today from the Norwegian-African Business Association in Oslo, and we had a very interesting discussion earlier, which you referred to, on insecurity in Africa, and particularly on war and terrorism and insurgency risks, which are always capturing international headlines, and which paint a very bleak picture on some parts of Africa, particularly the Horn of Africa, the Great Lakes region, the Lake Chad and Central Sahel region, parts of North Africa to a certain extent. But when we put those hotspots of insecurity on a map, what you actually notice is not that those regions have an insecurity problem. You notice that the rest of Africa has a very benign insecurity climate or security climate, and that these types of risks are not prevalent, that wars and insurgency have pockets at the moment outside of the specific insurgency regions that I mentioned earlier. What we at Pangea-Risk advise our clients on at the moment is particularly looking at commercially relevant insecurity challenges that many investors and operators on the continent face on a daily basis. And that primarily is the rising cost of living for many Africans, both in the cities and the countryside, and how that falls in the political context. What do I mean? Is that just like everyone around the world, we have seen the cost of food, fuel, electricity, and other key staples and commodities rise. Slightly lower than the crisis of 2022 and 23, but certainly the Africans across many of the major cities are not feeling the drop in consumer price index, the basket ratio there. What they are feeling is a sustained high cost of food, fuel, electricity, and that is causing concern that it will trigger more food riots, like we've seen in Sierra Leone, like we've seen in Senegal, and in Chad and Cameroon over the past few years. And it's also a concern that it may drive a wave of distress or dissent with the incumbent political regimes or governments. Like in Senegal, for example, we saw some very tumultuous electoral cycle at the beginning of this year. And there, the cost of living right front and center of the election campaign. If governments do not address the high cost of living, they are facing a higher risk of civil unrest and potentially being voted or protested out of power.
Do fiscal constraints make it more difficult for governments to respond to the issue of cost of living?
Yes, to a certain extent. Fiscal constraints have been coming out of the pandemic for many countries that have run out of external support lifelines, caused real problems. That said, the IMF has never been busy on the African continent. The World Bank and many other development finance institutions similarly are offering constant credit support. We have seen a drop in European interest in Africa. It's a generalization because certainly some of the North African and West African countries are still attracting European support for immigration issues and security issues. But more broadly, the war in Ukraine is taking up more development finance and other resources than Africa previously did. The US is very interested in Africa, but China also has dropped some of its large development finance commitments. So there is a need to look for other alternative sources of credit support. And interestingly, over the past few months, we have seen some phenomenal deals coming out of the Middle Eastern region, where the so-called Gulf middle powers are becoming a new lender of last resort to rival the IMF or China, and providing bailouts facilities that we've never seen before. So for countries that are struggling with accumulating foreign exchange revenues, that can no longer turn to the IMF or do not have a very strategic relationship with Europe or the US, there are still other alternatives out there. We are particularly been following a lot of the engagement of the Gulf states in Egypt, in Senegal, in Tanzania, in Angola, big port facilities, big real estate deals that are happening. So these are all essentially helping African countries to balance their budget sheets and to move forward on some of this fiscal consolidation that does need to happen.
This leads nicely to the issue of geopolitics, and you've already outlined a very important trend that we're seeing. I mean, this is something that's been going on for decades in Africa, but there's a much more diverse group of partners now that African countries are working with, can work with, and we're seeing new entrants like the Gulf states, who, as you said, have never really haven't sort of put the kind of money in that we're seeing at the moment. China's relationship with Africa is evolving. We're seeing that lending from China has gone down significantly. Now, at the same time, of course, we also know that there's a huge amount of geopolitical uncertainty and rising tension. Combine that with, the rise of the BRICS and the growing awareness that, the unipolar moment has come and gone, and we're heading into, at the very least, a bipolar, if not a multipolar world. What are some of the ups and downs for Africa in this context?
What a question. How long do you have? Let's do broad strokes here, because this is let's start with the global south, because I think that's a really interesting aspect where Africa has a real role to play. And the global south is a China-led initiative to rival the so-called West and engage more with the southern hemisphere and allow for south-south cooperation and collaboration. It's really looking at emerging markets with Africa front and center here. There are now 3 African countries that have joined to BRICS since the beginning of 2024, Egypt, Ethiopia, and South Africa, which is already one of the earlier members. But the point here is that these 3 official BRICS members are essentially launching pads for all of Africa's 54 countries to engage with the BRICS club. And that is to facilitate more engagement with the rising economies in Asia, and also to engage with other global south countries and markets, and provide an alternative to a Western-led model of investment, and trade, and development finance. There are multiple arguments to this in terms of how it can impact African countries, but an alternative way of attracting investment and cooperating on trade and incentivizing development finance can only work out better for many African countries. We've seen, therefore, a steer from some countries in West and Central Africa away from their long-time relationships with partners like France or the US, for example, and a new steer towards key security partners like Russia, or, of course, a real focus on long-standing trade and investment partners like China. Into the mix come many more Asian economies. We've seen Japan, India, South Korea, Vietnam, very active in trying to potentially not rival China, but take a larger slice of the pie. And on top of that come the middle powers of the Gulf region. Cash flush, very high risk appetite, and seeking important collaborations with African markets that are key to their own economic diversification initiatives. Agribusiness, broader energy, both hydrocarbons and renewables, green infrastructure, ICT and digitization are all very important objectives of the Gulf economies in terms of their own economic diversification agendas and what they seek to export to African and other emerging markets. Therefore, it's becoming a very busy marketplace these days in terms of accessing African markets, and that, in the end, Landre, I think will be beneficial. There's more suitors to choose from these days. Let's put it like that.
Look, I like to focus on the positive aspects here, because what I'm hearing is we have a more competitive landscape, and more competition, as long as it's healthy, means more opportunities. But just, for the sake of having a balanced conversation, what about the downside risk from some of this geopolitical competition? Particularly, I'm thinking about, this East-West narrative that's starting to come through. And we have, in recent years, seen hints, or there's been discussion that we might be entering a new Cold War, and that Africa might once again find itself in a position where it has to choose. Do you think that that's being overstated, or is that a real risk here?
Well, we are increasingly talking about the world being in a pre-war phase, and that we're moving on away from a post-war period to a pre-war period. That's a geopolitical context in which Africa is more a bystander. And then it really comes down to diplomatic and key political decisions that are taken. Most African countries are non-aligned, or simply have no strong position on the key conflicts happening in the world right now, such as those in Europe and the Middle East. That said, many African governments are picking positions, not just African governments, but African political parties in particular. And they are picking sides in geopolitical disputes and conflicts, even though they are technically non-aligned as a government or a state. That then brings confusion. Particularly in the context of South Africa, where we have seen a government that incentivizes trade and investment, particularly from China, but also the West, and yet has, on a political party level, been seeking alliances and relationships that have been leaning towards Russia and have been interpreted by Western partners as leaving their non-aligned status behind. There are similar examples in the Sahel region and in North Africa, which fit this model as well. It comes down to African governments having to essentially pick sides between the West and a China or Russia-led momentum at the moment. And that is putting African countries in a very difficult position. There are certainly being able to choose from more trade and investment partners should help economically, but leaning too much towards one option will certainly have a detrimental impact long-term, potentially sanctions, a drop in trade and investment, and potentially a waning diplomatic influence as well. So you're right, we have to address both sides of this potential opportunity for Africa.
It's a tricky balancing act, and depending on how you look at it, I mean, we're living through quite extraordinary times, exciting times, you could argue, scary times as well. But what's not in doubt is that we're in a more complicated world. Now, final question I want to throw at you, Robert, is what's your sort of your elevator pitch in terms of what would you say to businesses for example, in Norway, Norwegian companies looking at Africa, the executive summary of, hey, here's what you need to know, and if you're thinking Africa, this is how to approach it.
And the key message that we always have to our clients at Pangea-Risk is that we should be risk aware, not risk averse. There is country risk all around the world, and all of it is open to interpretation and perception, particularly in the age of misinformation and disinformation. In Africa, of course, there are country risk challenges, in some countries more than others, but there are risk mitigation strategies that can be developed based on local source intelligence, based on, I'm not in South Africa, there is no power cut here, I'm just in Norway. And there is more opportunity here to collaborate, to engage stakeholders, to find more local intelligence to help drive these risk mitigation strategies. That's how we at Pangea-Risk deal with our client base, and we help them to both support their risk mitigation strategies and, on the flip side, identify new business opportunities, of which there are plenty. Landry, I'm sure you'll agree.
Absolutely. Yes, it's not a blackout, it's climate awareness. That's why the lights went out. Very well put, Robert. Very well put, Robert. We'll wrap it up there. Thank you so much for the insight. It'll be fascinating to watch a lot of these trends in the coming months and years, and no doubt there's a lot more to come. For now, thanks so much for joining the podcast.
Good to see you again. All the best.